Happy Thursday, Josh. Good to see you.
Happy Thursday, Richard. Thanks for having me back, man.
Is that what day of the week it is? Thursday? Did I get that one right?
Yeah, you're telling me. I finally joined the dark side, and this morning tested negative for COVID. The last 10-ish days, I've been pushing through that. So to not know what day it is, I've been in a fog for the last couple of days, man. But I am I'm back in the saddle. I feel sharp. I'm asking for patience, but we'll see.
Well, glad you got through it.
Yeah, thank you. In the last couple of weeks, man, there's been, I don't want to call it chaos. In fact, I feel like it's been the opposite. And I think your most recent RiskSmith newsletter does a good job at hinting at this. I kind of want to get the ball going, man. You have anything you want to cover before we get started?
No.
Cool. Let's
roll.
Let me show you what I got here. I wanted to start hinting at your RiskSmith update here. You mentioned in the newsletter, I like this first sentence, just the media noise around the bear market and recession has eased off a bit. CPI updates came out on Wednesday. It's directly from the source. We'll see. It actually showed up a little bit under expected. Consumer prices rose 8.5% year over year in July. That's less than expected. If you remove the most volatile pieces, which we discussed last week, food, energy, oil, gas prices, things like that, CPI rose 5.9%. My question being, last month we talked about this. It was 9.1%. This month, 8.5%. There's a decrease there. Question is, are things easing up, or are we in the eye of the storm here?
We're still in the eye of the storm. We really have no idea where the future is gonna take us. This is a narrative shift that happens when the markets get oversold and it's time to rally for a bit, and we need a new, shift in the narrative to facilitate that rally. Whether or not that's like coming from the top down, somebody somewhere says, hey, time to shift the narrative, or it's just kind of the collective psychology of the markets, I lean towards the latter, but it's, I'll probably never know. But we were really oversold. The negative sentiment was so bad at historic epic proportions. We had to go the other way for a while. Right now, this other way that we're going right now, we're in the middle of a rally. There's some real legitimate signs that the rally is authentic. Smart money is buying. Market breadth, which measures kind of like how much money is flowing into stocks, is very positive. So I still believe it's a bear market rally. I think that it can go further than most people expect. And although I think we are at least at a pause right now, if not a short-term top, we'll see. But bottom line is, no, we're not out of the woods with inflation. These numbers are still crazy high. These are not acceptable numbers by any stretch of the imagination. And as non-marketable as it is to say this, we really don't have answers. Okay. It's not a time for answers right now. It's a time for vigilance. It's a time for increased attentiveness. It's a time for needing to pay closer attention to what's going on in the markets and our finances and our wealth, right? We have to be active. We have to be paying attention. We have to not take anybody else's word for it, right? And we have to get really clear about what we're doing, because if we don't, somebody else will make those decisions for us, and it's not going to work out in our favor. So I just think it continues to be a time to say, I really don't know, to not accept the, reliably unreliable messages from the media, and to leverage our own capacity of intelligence and insight and understanding. But you can't do that unless you're taking in good information. and actually processing it, maybe dialoguing about it with a few trusted people, and ultimately, reaching your own conclusions to make your own bets. On the topic of inflation, I just want to also share one thing that somebody else brought my attention to that I thought was cool. If you bring up your screen again, there's a site called Truflation, truflation.com. Have you seen this before?
I have not. Truflation.com.
So if you go to view dashboard there.
Let me minimize you here. Okay. Look at this.
So this is interesting. I don't understand fully what's going on with it, but it is an attempt, I believe, to even use some blockchain crypto technology to try to have an objective measure of inflation that is more reliable, than what we get from the government and from the media. So anyway, I found this to be a useful site to keep an eye on for inflation trends. And it would be interesting to just look into it a little bit more to see how they're determining these numbers. And I found it to be a pretty good indicator of where inflation is heading. And even, kind of before some of these numbers come out from the government and corporations. So cool. Check it out.
This is sweet.
Yeah.
And in your little spiel there, I let me just flip screens. I'm going to show you this. Talked about sort of the way that we can digest this moment, and we're in a short rally here, and there's response. There's points that there's factors that you can take into account here, and you can see that there's a small rally, and like you said, there's money funneling into the market, depending on what outlet you're reading, digesting, who you listen to. I don't know if you listen to the All In podcast, but I was listening to David Sachs talk about this week. Some articles will point to this idea of 8.5%. That's the number I gave you at the top of the call, which tells us year over year that things are still getting more expensive. There's the 12-month percent change, not seasonally adjusted at 8.5%. Other articles will point to the idea of 0.6%, where in June we're at 9.1, July we're at 8.5. That's a 0.6 decline, right? And after seeing what we've seen here, I mean, this is insane. This just straight upshot. And then we're finally getting this little 0.6 decline. Maybe things are improving. I think you answered this. I'm just asking you to double click on it because this is noise and people respond to this, and you can make immediate decisions.
I think Joe Biden said we didn't have any inflation.
Exactly. Yeah. Zero inflation. Yeah, exactly.
Zero inflation.
Yeah.
Which is, oh man, that's a painful thing to hear our president say. So yeah, narrative, man. Got to watch out for narrative because it's not your friend. It's propaganda, and you can choose what to focus on. Right. And if you have a big enough audience or bully pulpit, you can try to convince others, we had no inflation last month.
Yeah.
It's terrible.
Yeah, that's tough. It's been a couple of weeks and I haven't asked you anything about cryptocurrency in a while. So I'm going to spend just 1 or 2 minutes there. But this is a pretty cool graph, again, by Charter. These guys make awesome graphics, but I'll start with Coinbase last month. I mean, we could talk about and dogpile on them for a second if you wanted to. They reported their revenue fell more than 60% same quarter from quarter over quarter this time last year. That's their second $1 billion loss they've recorded in a row. We could smash these guys, but that was not my plan. That's direct correlation to the cryptocurrency market. 42 of the largest 50 coins have fallen in value over the last year or this year. Both Bitcoin and Ethereum, as you could see here in the middle, have lost more than half their value year to date. Coinbase is the third biggest crypto exchange in the world, the first biggest in the United States. In December, there were 11.2 million traders in the platform. As of today, there are 9 million traders in the platform. So there's a pretty significant decline in what's going on. I feel, and I'm digesting, and I think this is trying to point out the idea of people losing interest or resources, stamina, steam in this type of market. And I just wanted to ask you if you feel the same, or do you agree with this? Or are we losing steam? Is this just a reaction to, people losing resources and us entering a recession? I'm just kind of curious on your take on this.
Well, there's a lot going on in cryptocurrency right now, right? We haven't talked about the merge coming up with Ethereum going to proof of stake, right?
Yes, sir.
I think that crypto is still alive. I do have some connections that are deeply involved in the crypto infrastructure world. In fact, we actually recently got an investment in RiskSmith from an institutional player in the crypto digital asset space. So I don't think that it's going away, right? I think that what's going on is a lot like what's going on with Peloton and, even the meme stocks, although they're back now, right? Bed Bath & Beyond is up 400% in the past month or something, although Ryan Cohen just came out and said, hey, we might be unloading our stake, and now it's down, dramatically today. But I do think also that, there's some serious misinformation and propaganda in the space, that companies like Coinbase were happy to profit from on the way up. And so, they're experiencing that pain on the way down now, and they deserve it. They deserve it as far as I'm concerned. So is it the end of crypto? I don't think so. Is it time to jump back in with both feet? I don't think so. And by the way, a little thing I haven't mentioned before, but I'm getting pretty frustrated about this. Coinbase lost some of my cryptocurrencies.
I did not know this. Say more.
Yeah, I actually owned some BSV, which is Bitcoin Satoshi Vision. We've talked about Craig Wright and BSV before. I own some BSV from a fork of the original Bitcoin to Bitcoin Cash to BSV. I tried to send it to another wallet, and Coinbase just nuked it, gone.
No way.
And it's been like 6 months now, and they don't give me any answers about when it might come back. And they did give me some BTC Bitcoin to somehow make up for them nuking my BSV, but they absolutely nuked it. And it's also interesting, like in their disclosures, when they went public, they talked about if Satoshi, one of the biggest risks to their businesses was if Satoshi Nakamoto ever came back from the dead, so to speak, and had something to say about the digital currency space, which is what Craig Wright claims to be, right? So I'm agnostic on the real identity of Satoshi Nakamoto, but it's pretty interesting that they don't support BSV, which is a pretty widely held cryptocurrency doing very innovative things, in my opinion. And then they actually nuked my BSV and are trying to satisfy me by replacing it with BTC. Not okay.
That was good. Yeah, totally agreed. Yeah, very interesting, and we'll keep a tab on that and see how it plays out over the next probably year. That's however long it takes to shake out. Maybe a follow-up question. I wasn't expecting to ask this, so I don't have anything to show you, but no, the number I gave you, 42 of the largest 50 coins have fallen in value this year. Bitcoin, Ethereum cut in half, losing half their value, more than half their value. Let's say you're right, and cryptocurrencies, that market and their purpose, and it's not dead, right? That maybe it was just overvalued and that things were pumped and that we're still in the very early stages of this and that there's still growth that needs to be had. Are you keeping tabs on any coins in particular? And we'll preface this with like, this is not investing advice. You mentioned BSV there. Are there any other coins that you're tracking that you have on your watch list worth kind of just taking a peek at?
I mean, I own BTC, Ethereum, BSV, and Algorand.
And are you doing all those through Coinbase there, or was that just kind of a trial with BSV and
They came in through different sources? Totally. And I've been in and out of other cryptos along the way, but I've kind of settled on a few that I've decided are my long-term bets. And I'm not really spending time on altcoins and trying to figure out the whole landscape these days. More focused on helping people to learn how to use risk management to improve their outcomes across the board, rather than on which is the right next big bet to make. Other people are digging into that in a way that I never will. So I'll leave it to them.
Here's my shift of gears. I'll get out of my cryptocurrencies, though. I did just circle the merge, and that's about a month away. So it's probably time that we dip into that.
And Ethereum's up like 80% or so.
Going bonkers, yeah.
Yeah.
You're telling me, man.
But by the way, that's a lot still way down from its all-time high. Let's not get overly excited. It was interesting. Just a quick point here,
please,
about percentages up and down, right? You hear like, oh, Bed Bath & Beyond is up 400% in the past month. Oh, they're down 20% today. Okay. So those aren't like apples to apples, right? 400% up versus 20% down. So if something goes up 400%, it went up from say $10 or $100 to $500. Okay. 400% gain. Well, a 20% decline from $500 is $100. Okay. So that's more like, a third of the gain or a quarter of the gain, right? So, that was it, of the gains, that was 100% of the 400% total. Okay. So 20% down is, would have been, 100% of the upside gain. Okay. So just a little point to note when you hear like something's up really big and then something's down, right? You can't go down more than 100%. You can, but it's, so just keep that in mind when you're listening to percentages, because like 400% up versus 20% down doesn't sound like that much, right? Like that was a lot of up. Well, it's a big down. So yeah, just one of my thinking in bets tips for people. Totally. Probabilities are so easily misunderstood and lend themselves to narrative stories that others want you to dial in on. So
appreciate that.
Soapbox. Standing down now.
Have you heard of this idea? And I'm very new to it. In fact, just to be totally transparent, I'm probably 4 days into it, so I'm not going to do the best job at describing it. But have you heard of this idea of greedflation?
No.
Okay. Let me share this with you. I thought this was really cool, and I'd be really interested in your thoughts on this. I crossed paths with this, like I said, 3, 4, 5 days ago now. Start here, did an interview. This guy, I'm going to butcher his name, Rakeem Maboud, I believe is his name, but he's an economist. And I'm not one, I try not to, we've been doing this over a year, and I don't think I've ever read something directly to you, but I highlighted this. I thought it was really, really good. This describes the idea of greedflation. It says, if you look at the data, and first I'll preface this with, we've talked about all day inflation being at 9.1 or 8.5% today. If you look at the data, corporate profits are at 70-year record highs. So even as consumers are struggling to send their kids to school, put gas in the tank, put food on the table, some people are making lots of money off this crisis. essentially what's going on is big corporations are using the cover of inflation to jack up their prices beyond what input costs would justify to rake in those profits, and consumers are paying the price. So the most egregious example, and I thought this is perfect, credit card companies, Visa and MasterCard, for example, are massive duopolies in their space, have huge market shares. We saw that these companies make profits by a fixed percentage cut of each transaction. So with inflation rising, prices rising, they would inherently pull in more money, yet these companies are also increasing the transaction fee. So if you're getting the 10%, or if you're going from 10% of the price of an apple to 15% of the price of an apple, you're going to be making more money. Critically, I think lots of companies are blaming the supply chain issues. Visa and MasterCard do not have that excuse. There are no supply chain issues here, straight corporate profiteering. This idea of greedflation, consumer prices are going up due to supply chain issues, the war in the Ukraine, things like that. On the other hand, corporations are using this type of opportunity to pump up their prices, even if they're not directly impacted by the supply chain issues or by the war in the Ukraine. They call this profit maximization. Yeah. Well, my question is, which comes first, profit maximization or inflation? And I really geeked out on this, man. I thought it was really cool. So I'm going to share, if I can get this little thing out of the way. Okay, I can't fix my tabs. I'm going to stop sharing just for a second. I saw this really cool study. Here we go. Saw this really cool study talking about profit maximization. And they asked voters, what do you think is the biggest contributor to inflation at the moment? And 32% of all voters blamed this idea of profit maximization. Curious in what you think, and which comes first, the chicken or the egg, and if this is even worth spending some time on.
It's an interesting thesis. I sympathize with it. I think it's probably true. The Visa MasterCard example is a great example. But for me, Josh, what I keep coming back to is that we really only in the end have ourselves to blame that this is the world that we live in, right? So if you're like a young person chasing Bed Bath & Beyond in a speculative frenzy right now, right? You've basically said that there's no objective reality that I really have to adhere to. There's no kind of collective social good. You know, I just need to get as much money as I can while I can. And that's like the world that we live in today. That's the attitude that everybody has. Just, you know, get as much money as you can in as short a period of time as you can. Is it any surprise that that's what corporations are doing? That's what the culture's doing, right? So that's the world that we live in. And yeah, I bet they're doing it, you know? And we have a choice to either like keep doing business with them or stop doing business with them. You know, you don't have to use your credit card. You can use cash. You don't have to use your credit card. You can use a debit card, you know, but we're all caught up in this world that, yeah, is really about nothing except profit maximization. And it's not just the corporations, it's the whole culture that is about profit maximization. And it's not a sustainable culture, you know, it's really not. And so that's my take on it.
I appreciate the take, man. I wish I had more feedback. Like I said, I'm still digesting, and unfortunately, when you speak, I'm like, damn, that makes more sense than what was in my mind. So I'm gonna roll with that for a second, but I may come back with some pushback. I showed you a newsletter, your most recent newsletter that came out last week. In that there's a cool line, and I've pulled it off the screen, or I'd pull it back up. You call this, you know, in this moment we're in, this time that we're operating in, a nonstop stress fest. And where I'm headed with this, I don't know if you have it queued up or if you're able to talk us through it for a second, but I'm going to kind of guide us towards your app just for a few seconds, if you don't mind. I
never mind talking about my app.
Yeah. Okay, cool. I feel like I'm aging in dog years. To your point, I feel like this is a nonstop stress fest. If you're trying to be what I'll call, financially literate, financially savvy in this time. I'm aging in dog years, man. Every day it's just exhausting and there's chaos.
Mhm.
What point in the email here, it says one of the best ways to avoid stress is to have our app watch the markets for you.
Mhm.
I wanted to double click on that. And I mean, that's something I'm very interested in. And if I
Yeah.
could pull out of the markets and not worry about watch list and pulling things up in the morning or at night, or if you could just kind of talk me through what that means, maybe a use case, it sounds extremely useful. I'd like to see it in action.
Funny you should ask, or not funny. I mean, and this is what part of the stuff I'm thinking about all the time, but let's see. So this is a spreadsheet that I'm working on. This is not in the app right now, but it's destined for the app. Okay. And I mean, I know this can get a little glassy-eyed, but to me, Josh, the main idea is risk budgeting. Okay. And so what we need to know every day, is, are we within our risk budget or not? Right. And how do we tune out the noise, right? And pay attention to the things that we need to pay attention to, and leave ourselves enough space so that we can, do some of our own research, reading, insight, creativity, etc. Right? If we let ourselves, we will just be glued to the screens all day long, right? And we're basically following clicks, whether they come from email or one site leading to another, etc. And it's all very interesting, and we learn a lot, but we don't really digest it. And for the most part, we get drawn into a lot of stuff that we didn't intend to. Did I wake up this morning thinking, oh man, I need to buy a new HRV monitor to go along with this cool software that's now available to monitor heart rate variability? No, that came in on an email this morning, went down that rabbit hole. And but that happens to us all the time. So meanwhile, what we're looking at here is just a portfolio. It's actually a portfolio that Justin and I built in RiskSmith 6 months or so ago. And what it shows is what is the risk budget for the portfolio as a whole, $2,000, and what's the risk budget for different positions in the portfolio: $150 for Alcoa, $300 for AbbVie, $200 for Berkshire Hathaway, etc. And every day we can see, are we under budget, on our risk budget, or are we over budget? Okay. So that's what gets me excited here, that we learn to think in terms of risk and in terms of budgeting risk, because really that's what we're budgeting when we're in the markets. We've got a certain amount of risk we can take, and we want to maximize the rewards that we can gain within our risk budget. And so what happens, where the stress comes in, is when all of that, when we aren't really clear about our risk budget, right? So all of the stimuli is coming in about the craziness that's going on, and we're having all kinds of thoughts and feelings about it, right? Because we don't actually know where our lines in the sand are, right? So if every day we could just know, hey, I drew these lines in the sand, and nothing happened in my portfolio today that went outside those lines. So really, I don't even have to look at it. And then when something does happen that goes outside those lines, okay, time to pay attention to it. And maybe you set some, a weekly time or a monthly time that you look at your portfolio and see if everything is how you want it, if you want to make any adjustments. But we're not getting captured in that daily attention churn, that there's a lot of businesses built around that churn, right? From media companies to social media companies, technology companies, stock exchanges, et cetera, right? So anyway, this is the direction that it's going. And this is showing just like each day, kind of what was the above or below your risk budget on the portfolio and a position. So got some positions in here that are clearly, outside of their risk budget on a consistent basis. And we need to pay attention to them and look at it and see if we need to make some adjustments. So that's the kind of thing that I think would be really cool. Let me see if I can get out of sharing my screen now. Are you still there?
I'm still here.
All right. I lost the controls. Oh, there they are on another screen. Stop share. That's, it's not in the app yet. We've got some notifications now. And, we're certainly going in this direction of helping people to build risk-savvy portfolios using correlation and volatility as inputs to your decision-making, which, those are the rules of the game, whether you know it or not. Robinhood's not going to tell you about it. Coinbase isn't going to tell you about it. Citadel Securities isn't going to tell you about it, right? But the pros use correlation and volatility to help establish some boundaries of risk, right? And stay within those boundaries and try to maximize your mean, right? Maximizing your mean, your return, and minimizing your variance and staying within your lines in the sand. So imagine if you could do that, right? And then you could say, well, I'm still within my boundaries, so don't need to worry about it. This was expected.
As you're talking through this, I'm lighting up inside, and I'm going to find a segue here. Just give me a second to find it. As I hear you talking about the alerts, and I didn't know it was going to go this way, but I hear you talking about, way back when, how we introduced, or how you were introduced to me. I interviewed you on my podcast, and then shortly after I went through this, what I'll call beta program or stealth program that you had launched. And a few of my friends and I, listeners to the podcast, went through this 7 principles of successful investing. And I should remember you and I working together. Maybe it was step 3 of know when to sell before you buy. And you talking about having these criteria and these frameworks and triggers, and knowing, removing the emotion and knowing sort of the barriers and thresholds that you have, and you're tracking this in real time, and it's green, red, and there's no emotion involved, and you're not having to read the media or the outlets and get that. As you're talking through that, I find myself tapping back into that lesson, and I'm laughing because since then, I think maybe one other class has been able to run through that 7 principles of successful investing. Each class is giving you a little bit of feedback. But that's one of the things I'm most lit up about. I love this app to death. That's definitely your baby. This course was extremely impactful to me. Several of my friends and I took it. It's extremely impactful to them. We continue to talk about some of the criteria and lessons and the things that you provided in that. This is a long-winded way to say that yesterday, maybe 2 days ago, you sent out an email and notified everybody, hey, listen, this 7 principles of successful investing is back in the markets. In fact, I'll pull it up. I have it here. And it's new, it's revamped to 2.0 or 3.0, however you want to frame this. I wanted to give you a second just to share a bit about this course, because like I said, it was monumental. It was moving to me. It was game-changing to me. And when I saw you had it back out, I lit up. So I want to give you a second just to share a bit about maybe changes you've made or what people could expect in this type of course.
Well, you mentioned you went through a beta version of it. So this is the non-beta version. So we got it up on Udemy, which is a platform for online learning that doesn't take just any course. You have to actually go through a vetting process with them. So they accepted it, and we've got it up live on Udemy now, and we're really excited about it. So you mentioned the principle number 3. I don't remember if it's principle number 3 either, but know when you'll sell before you buy. And that came from Bruce Kovner, the Jack Schwager, and I'm sure I've shared this story before, but Jack Schwager, interviewed all the market wizards, wrote all the market wizard books, right? And when you ask him, what do they have in common? He says, nothing. They're all totally different, except they all are pretty religious about risk management. And he said, oh, and by the way, Bruce Kovner said, that 90% of risk management is knowing when you'll sell before you buy. Okay. So my personal belief, Josh, is that risk, mathematical risk, has been weaponized against the public through behavioral psychology, behavioral finance, and so our biggest challenge as investors is to actually establish our boundaries and stay in our lane, and that we're constantly enticed to go outside of our boundaries, one way or the other. And then, more sophisticated market players than us know how to leverage, us going outside of our boundaries to capture our reactionary mistakes.
Yeah.
So risk budgeting is the beginning of learning what your lane is and how you can stay in your lane. And you have a lot of autonomy within your lane, but if you go outside your lane, you're really opening yourself up to basically being led around by the nose and to being kind of put into a reactionary position, right? Where you react instead of proact. And so, yes, risk budgeting, having kind of essentially knowing when you'll sell before you buy, right? Having clear boundaries that you've thought through, established, and that you get to know yourself better over time. That's another thing that I want the app to eventually do, is be a feedback loop for you, so that you sort of understand better where your lanes are, where are the edges of your lanes. And you might think it's one place, but over time, as you interact with the markets, you're like, oh, wow, I didn't realize I was such a risk taker. Or, oh man, I didn't realize I was such a crybaby. And I just, maybe crybaby is not the right word, but I don't like risk, right? And so I think there's a huge opportunity there. And that's what we're working on. So yeah, the 7 Principles course is out. Love it if people would take it. I think you can get it at a ridiculous discount right now, like an 80% discount.
I almost lost my mind, man.
It's good to have you take it and let me hear about it, and ultimately share your thoughts about it on the course, because that gets other people interested too. So appreciate it.
Yeah, I mean, thank you, man. I've been beating on your door for this thing, and like you said, when I pulled it up on Udemy, I saw it's like $14, $15. I almost threw up. I'm like, it's a steak dinner at the moment. I mean,
it makes me a little uncomfortable, but
cancel your dinner, cancel your coffee, whatever it is, and invest in this course, take it in 2-3 weeks. And I mean, literally, it sounds ridiculous, but this is a life-changing moment. And it's at the moment $15, which is, it's insanity.
And, but again, it's life-changing if you do something with it.
100%.
Right? And it's not a magic silver bullet, like our talks here, right? I'm not telling you, hey, the market's topping, the market's bottoming, buy this, sell that. It's really about you owning your own financial future, taking personal responsibility for your own wealth, right? And kind of setting the framework in which you can pursue that. And it is a process, right? Doesn't happen overnight. Something that you got to want to do. And but I think a lot of people out there are realizing more and more that the world is financial today. Whether we like it or not, this is something that we have to be literate in.
When I went through your beta stealth program, I was able to play with the app as well. I should know this, man, but are they going to be able to play with the app, get some sort of trial or something like that if they went through this Udemy course?
Everybody who takes the course gets free access to the app.
Check that out, man. That's something I expect to be lit up. This is that's really exciting. Man, you had a newsletter go out, I believe it's earlier this week, about what is wealth. I think I want to punt that to next week and maybe kick our conversation off with that, because there's a few things I wanted to hint at, this book that I recently read and things like that. So I'll put that on the shelf. We'll come back to it. But I think
that was one of my favorite things I've ever written.
What's that?
That was one of my favorite pieces I've ever written.
The what is wealth piece?
What is wealth? Yeah,
it's fantastic. Cool.
Yeah.
We'll put that on the shelf then, man. That's something I spent last night redigesting. I've got a bunch of notes in front of me, so we'll start next week with that. I also owe the merge. We'll spend some time next week talking about that. That's all I've got for you this week, man. Really, really appreciate both your time and the patience as with my COVID fog.
Well, here's something to think about if we talk about what is wealth next time.
Please.
And this is a quote I heard from a lady named Catherine Austin Fitts, who said, "All wealth comes from life." I think that's something very important to meditate on. All wealth comes from life.
We're going to leave it on that. We'll come back next week.
All right.
Thank you very much, brother. Appreciate it.
Thank you. Bye.